Welcome to the program tonight. First, just in one word, each of you. First, Mr. McClintock, yes or no, would you have voted today?
No.
Tell me why, Mr. McClintock.
Well, it's bad public policy. If I came to you, Lois, with $12,000 that you needed to write a check to me, and I'll invest that in the absolutely worst mortgages in the country, would you take me up on that? $12,000 is what, for every family, is what $700 billion amounts to.
We're led to believe that, it's going to be Armageddon if we don't vote for this bailout.
Well, those are the same folks that told us we had to run up $160 billion for an economic stimulus package earlier this year. The same folks that told us we had to bail out AIG for $80 billion. That would save the financial panic that we're seeing. They've been wrong constantly. When the government borrows $700 billion from the capital market, that's the same money that would otherwise be available to homeowners seeking to buy new homes, to small businesses seeking to expand. There's an economic term for that. It's called throwing good money after bad.
Because we have heard by an overwhelming number of Americans are opposed to this bailout plan, and yet you may have to hold your nose on this, but Americans and Congress should vote on this effort.
But there are other ways of doing it besides borrowing $700 billion that could be going for good loans and using that same money to buy up bad ones. If the Fed reduces the Fed funds rate by about 50 basis points, that's going to improve liquidity in the market, and there's a great deal more that we can be doing. I'd like to see the capital gains tax eliminated, finance it by substituting the farm subsidies bill. That would inject enormous amounts of new capital into the market right away.
Well, I'm guessing that you would say you're not going to be in favor, if you go to Congress, of increased oversight and re-regulation.
Well, it depends. There are certain things that the Fed did that was right, and the SEC that has done that's right. For example, stopping the short sales on various enterprises. I thought that was a very important stopgap measure. Extending FDIC insurance to money markets, stop to run on those markets. There are certain things that should be done. But running this nation another $700 billion in debt, $12,000 for every family in this country, to cover bad decisions that were made, I don't think is good public policy, and I don't think it improves the economy.